Hello again, this is Alex with MasterChartsTrading.com, and today is Friday, October 19, 2018. It's a rare occasion I'm actually recording this on Friday, so please hit the like button and subscribe to this channel if you haven't done so already. This will keep the channel going. So, kind of indecisive note for the stocks. Lots of oversold conditions, but I think still that big names are still, in a bull market. A couple of really troubling signs, especially with the financials, may be entering in a bear market. But technology is still leading and it outweighs the negatives for now. Obviously, foreign markets are not doing nearly as well as United States markets, so lots of new lows all around the world. We'll look at home builders as the interest rates are rising. I think the less demand for housing, I'm guessing. Go figure. And junk bonds not cooperating with stocks, so this is not looking good for stocks. But anything is possible, so we will need to keep our minds open and trade the charts in front of us. Look at Forex as the dollar, I think, is again marching higher. Gold is, I think, gonna get crushed if this continues. Briefly look at natural gas, not much has happened there. Oil, I think it's coming down to decent levels to watch for a bounce, and cryptos did absolutely nothing. Alright, so here is S&P 500, ETF SPY. On a daily time frame as usual, our normal time frame. So here on this chart, notice please the four lines that I'm using here. We got the green line, the blue line, the red line, and the yellow line. You can find out more about them at MasterChartsTrading.com. That's MasterChartsTrading.com. These are the indicators that I sell. So the indicators themselves, they catch the price action quite well, I think, and you can kind of see the price action around the indicator lines, currently around the blue line. I think this is a bullish chart because we have come down towards the blue line from above. So these indicators, again, I developed these indicators. You can look me up at MasterCharts Trading, but also you can see my name on TradingView, and the scripts are there. You can look for them there. So the way I'm looking at this chart, notice that we had really nice opportunities. For example, here one in May of this year, 2018, and another opportunity here in June of this year, 2018, for a very nice gain, especially if you used leveraged funds. I mean, we can do futures. So obviously to trade futures you need a very large account, and by 2018 standards I would say I wouldn't start trading futures this way, the way I'm showing it right now, until you probably have like, I would say 100,000, maybe a little, maybe more, because you really need quite a lot of room to fluctuate for the system to work. So here on this chart, S&P 500, you can see a big green candlestick here on the 18th of I'm sorry, on 16th of October of this year, and so far, I mean, it looks like it was a genuine breakout, but it's anything is possible in the stock market. So the way I'm looking at it, I think I would be wanting to buy this chart. I want this chart to appreciate in price, to go higher. I don't yet want to short it. I don't want to place any bearish bets just yet on this chart. And when we get to European equities and other foreign equities, I'm kind of getting ready to start considering placing bearish bets. But before a true bear market sets in, I think the S&P 500, this chart here, needs to drop from today's levels about, I would say, about 180 points or so. So a drop to about 2580. So anything below 2599 currently, I think would be pretty serious issue, in the sense of not only it will be a 6% drop, which is not that huge, but I think the bigger issue would be that this drop, especially with the close below 2599, 2600, may put the entire market in a bear phase, in a bearish phase. And bearish phase means that we're simply going to be doing the inverse of what we previously did. In other words, before we were buying a pullback from the highs, and when or if this bear market sets in, we'll be doing the opposite. We'll be selling or shorting on any rebound towards, for example, the red lines here. So overall, many warnings, but some stocks, especially the big ones, are still, I think, in an uptrend. Here's Google, for example. I mean, notice that there was now a close below this red line, so this is kind of like a cautionary stance, warning phase. If we continue lower, especially to 1029, I think that would become a bearish security, and I would avoid it. But overall, it doesn't look that bad. Here's Amazon. Looks pretty good. I would be looking to buy it personally, if you can afford it. Apple, for example, too. So one of the biggest companies, and still quite close to the high. So overall, the generals, and I call big names like Apple, Amazon, are not yet fleeing. Facebook fled. You can see, you can see there's really enormous gap here back in July of this year, 2018, and then a fresh low here just now in October of this year. So some are not looking as good, obviously, but some look okay. So Microsoft, for example, also doesn't look too bad. I mean, there's a fresh high here. So United States markets, the generals are still not fleeing, but we can look at some of the sectors. Full sectors kind of got really sold strongly, especially basic materials and financials. And I just showed technology. So, for example, here's XLK, technology sector ETF. Pretty decent opportunity, if you ask me right now, possibly to just buy it here. So let's look at some of the laggards, and first let's look at XLB, which is a basic material sector. So a lot of selling. Notice here on between October 8th and October 9th, 2018, a gap in price and a close below this yellow indicator line. Again, you can find out more at MasterChartsTrading.com. And then you can see a fresh low just today on Friday. So basic materials sector, not a big sector of economy, maybe 3% of the economy, but still, it should be taken into consideration. I think the biggest problem here is financials. So here are the financials, XLF, and you can see a lot of selling here on the 10th of October, followed by more selling on the 11th of October, and basically this is it. This is my line in the sand. So if I had any positions open, I would close them by now, even if it's a losing position. And again, I'll show you another one which should be thought of as an educational lesson. and that's of XHB. And we'll get to foreign markets in a second, but I wanted to show XHB because it really ties into when to exit. So here's XHB, and notice what happened here. This is an actual chart I sent to my subscribers on 13th of August 2018 of this year. I sent this to my subscribers. Even though we had a small bounce, overall I would still consider exiting at this point. And notice what happened afterwards. Big drop. So if you had a position and you didn't exit, you would have had another 13% loss. This is a psychology of trading 101, and it basically shows that you need to be strong enough to be in this market, or you should be strong enough to be in this business. And this is a business of, buying and selling of stuff. And if you're not strong enough and you don't exit, then you may get really punished really badly with a drop like this. So this is called controlling your risk. And then additionally, once you have controlled for your risk, actually doing it, actually executing. And oh man, you have no idea how many people come to me and say things of, like I bet too much money, I don't know when to exit. I say, you have to plan ahead basically, and be strong enough to admit mistake. And this mistake is basically exiting at stop, and mistake in the sense of that the trade didn't work, and that means that we just need to cut our losses. Simple as that. So let's continue to foreign markets. So here's Vanguard European ETF. We can also do EZU, which is iShares version of the European equities markets, and they're all showing the same thing. And this is basically a bearish security that is making fresh lows. I sent again to my subscribers, I believe, in June of this year, to basically avoid European equities. Nice opportunity to short here in July. Potential opportunities to short here in August and September, but I'm not sure if I would have taken these opportunities because I didn't really see an overbought condition strong enough. So you can't catch every single trade, obviously. But overall, this just shows that European equities are in a bear market, I think, and should be avoided at this point of the game. We had also a lot of selling in Canadian markets and also Mexican markets. So possibly all of the markets that I'm monitoring are going to be in a bear market pretty soon. Especially the Mexican market joins the bear markets of other emerging markets equities. So here's EEM, emerging markets, at fresh lows or close to fresh lows. Again, I had sent this to my subscribers in June of this year, and you can see aggressive short sellers were rewarded here. So basically they're aggressively unloading equities. Here's China aggressively selling, India, AAPL aggressively selling, well, some conservative selling here too. Japan, EWG, recent addition to what I would say a bear market already. I would just avoid it basically. Japanese shares, Japanese equities. So that's pretty much leaves nothing but the United States equities that are possibly still in a bull market. Because you know how it works with investors. They want to buy stuff and hold them. Traders don't think in those terms. Traders think about opportunities that arise. So for traders, a bear market also is an opportunity. So if we see a bear market, we can look for selling opportunities. And let me just show you a couple of those. So for example, here is Brazil, and big rally here from September lows that could still continue. I'm not, it's possible. Maybe we'll see a breakout. I mean, one of the strongest markets out there right now is Brazil. So maybe we'll see a breakout. Maybe things will turn around and we will see appreciation of equities around the world again. It's possible. Russia also doesn't look too bad, RSX, but I would still short it. Like you can see that I actually put the arrows here, but on a relative basis they don't look too bad. Here's Canada, for example. Canadian equities just took an enormous dive a few days ago on the 10th of October, then rebounded a little bit, but making fresh lows again. So perhaps these are those aggressive sellers that are coming in. And here's Mexico, EWW. I kind of follow the market because we live in the United States here, and caution. I thought we're gonna break out. I thought we had a breakout here in September, or actually even early in August of this year, but no. Maybe it's already, a failed breakout. It's possible. So, yeah, caution on Mexico. Pretty much everything that I monitor, except for Brazil for some reason. Again, I'm not exactly sure what's going on there. EWZ Brazil looks kind of promising. Maybe it will pull out of this. But other than that, really, I don't see anything, in the world, really, that is super enticing to invest in. In other words, sit, in positions and wait for the appreciation. Shorting, that's a different story. So, junk bonds. Let's look at junk bonds. Junk bonds correlate highly to the general markets. Here's that chart I keep showing. This is a high yield. The reason why I'm using this 5-letter fund, so this is a mutual fund, is because it has a lot of longer history than JNK, junk ETF, because you can see that it was launched around 98 or so. So you can pretty clearly see that the junk bonds and stocks correlate highly to one another. Occasionally, junk bonds, outperform, but overall, the correlations are pretty high. So it's difficult to say, if junk bonds will lead to the downside, or if they will turn around and make a fresh high. Right now, if I was betting, I would bet on the continuation to the downside. And you can see the downward facing arrows here, places where I would consider placing bearish bets. And this goes back to early February, in February of this year, and then in April of 2018, same this year. A couple more places that potentially could have been shorted in here are on August and on in September of this year. So overall, junk bonds are in a downtrend, so we can see that again they correlate highly. So it's possible that stocks may continue lower from here. This is S&P 500 SPY. So if SPY continues lower, like I already showed, I think we could enter a bear market, and we're not that far off. We're like 6% away, basically. All right, so bonds. So junk bonds I just showed, TLT, long-dated treasury bonds, making new lows. In other words, if bonds are on a downtrend. That means the yields are in the uptrend. So here's TYX, and you can see the yield really increased a lot. And theoretically, if I was trading it, I would probably buy it here around August of this year, somewhere around here. If you could trade this instrument, which you can't trade TLT, and you can short TLT. So theoretically, you could have done this, and I actually remember putting this short again, question mark, and yeah, look at this big move afterwards. So overall, bonds are on downtrend, and the yield on the uptrend, so it is becoming more expensive to borrow money. This is also, like I already showed, is reflected in the price of home builders. I think this collapse has something to do with the rise in interest rates. It's a pretty obvious correlation here, I think, an opposite correlation. Alright, so let's move on to the Forex universe. Okay, let's continue to Forex universe. Here is DXY, the dollar index. I'll just show you the kind of history of my thinking, because actually my videos do cover this, and you can look in the archives, and I've been pretty consistent about the commentary. So this is a dollar index going back to about June of 2017. So as early as May of 2017, and possibly as late as June 2017, dollar has entered bear market here. Find out more about these indicators again at MasterChartsTrading.com. That's MasterChartsTrading.com. You can sign up and get these indicators on your chart. You can also look for me on TradingView at MasterCharts. So, unequivocally bearish chart here starting June 2017, and from here on I would basically look for shorts, shorting opportunity or selling. It could have sold potentially even as early as July of 2017 here if you're aggressive, but basically yes, something of the same nature. Aggressive sellers dominated. And then here I'm gonna zoom in a little bit. In May of 2018, we had potential for a breakout, and like I said, I don't normally place a limit sell orders. I wait for the price action to confirm. So in this case, I would not have been short here. I would have had no positions in May of 2018. I would have shorted if it closed below this red line, and it didn't. So I would have just set it out basically. And you can see that as we continue, we see a breakout in May of this year, 2018, and from here on we can just say, okay, this is it, we're just gonna be buying, and we could actually buy immediately with a stop below this red line. And then you can see that it went in our favor and it continued higher and higher. So this would have been a very nice trade basically already. Now you can do the same thing with individual currencies, and let me show you a couple of my latest trades. USD JPY. So I already showed this one. I closed this one not that long ago. So overall, as high as 350 pips. Me personally, I made about 200 some pips because I had 3 exits. So overall, it was maybe like 200 some pips, which is still very nice if you know how to trade Forex because of the leverage. So that's one relatively nice trade. Again, same basic principle. We're looking for a security that has already broken up. So here, broken out. So here's the breakout that occurred in May of 2018, and then we simply look to buy on a pullback towards the blue line. And you can again find out more about this indicators at MasterCharts Trading, you can see the price action really catches, is really caught well by the indicators. So you can see that again, we could have just simply bought, and this is exactly what I did. I opened the position exactly at the blue line, sold half. A few days later, moved my stop to entry. The security continued higher, and just, basically at that point I was getting ready to exit. Another trade I have open is US dollar versus Canadian dollar. And this one I actually entered a few days ago only. So again, my thinking is US dollar versus Canadian dollar is in an uptrend. Why do I say that? The breakout occurred here in May of 2018. Breakout means a close above this blue indicator line, of which you can find out more. We can simply buy immediately. There's a 380 pip gain, and then keep buying basically on pullbacks. So there's another 280 pips. Here, theoretically, you could have made some money, but I would have put my stop again at the red line here. And this is exactly what happened for this trade. So on 15th of October 2018, I see already that there was a breakout. I kind of wanted to buy it on the 10th of October, but this price was just way too high. So I was like, I'm gonna wait a little bit, buy it like closer towards the blue line, because I just felt like it's not gonna just fly away yet. So I put in a limit buy order at this point, and I got it filled at 1.2977, which is like right there. My stop was down below here, so that means I calculated my position. So my position was small enough to accommodate such a large stop. But in either case, because of this larger stops, I get a very high success rate, sometimes over 80%. And here's my first target. Wasn't that far off. It was one average true range. Average true range, you can find out ATR. So I put, what is it, like 80 pip stop, or not stop, but target. It was reached a few days later. I sold half here, and I moved my trailing stop to entry. And I did not get stopped out here, so I'm still have about half of my position on the table. So very easy. You can theoretically trade intraday, for example, on minute chart, etc. But I keep saying that this is more difficult. So you can simply buy smaller positions, but have higher success rate on higher time frames. For example, daily time frame. I prefer daily or higher. Alright, let's continue to natural gas. So, and GAS. You can also do natural gas futures if you have a futures account. Theoretically, you can trade with UNG. Not my favorite, so yeah. Anyway, so I just wanted to show the general direction of the natural gas, and I think there's a breakout right there on the 3rd of October, and from here on basically we're looking to buy only. Actually today looked kind of nice, so potentially we're going to see higher prices for natural gas. US oil, light crude oil, so it's coming down to a very nice level around 68.40. I think around 68 here would be a killer price to go long basically. Briefly about various coins. So Bitcoin kind of had this surge here on the 15th of October. Not much has come out of that. We need to see a close above 95.25 before I'd say that Bitcoin is now in a bull market, and it's still not there, I don't think, obviously. XRP USD was another hope that maybe various coins have indeed bottomed, but so far I don't see it. Litecoin, same thing, nothing there. Ethereum, same thing, it just keeps going down basically. EOS, USD, yeah, so nothing there basically. You got nice gains here from shorting if you did that a while ago. So so that's it for this week's recap. Please head over to MasterChartsTrading.com, click on alerts and indicators, and sign up for one of the services. Again, the interface may be changing soon, or rather definitely will be changing soon. So we're upgrading the website. We may be upgrading the service because of more custom nature of the service that I'm hoping to introduce. Don't exactly know the time frame because we're trying to possibly raise some money to expand the operations. So if you're interested, by the way, do contact me. Maybe we'll work something out. Send me a note. I may be interested in looking for some investors. Alright, so that's it for this week's recap. Again, if you have any questions, send them in. Please hit the like button, and hope to see you and talk to you next week. Have another great trading week. Bye-bye.